Hello, ORAT Nation. This is Dan Bird on Sunday, April 28th. And I'm doing a quick video without Mr. Zuber because I just came back from the Keys and we didn't get a chance to do anything today. So I'm going to do one quick one. Hopefully we'll get it posted tonight just to get an update on where the market is, where it's gone for this week. So let me jump into it. I'm going to share my screen. For those that are interested, this is my website. Free newsletter is right here. So go to breakpointtrading.net. And this week's newsletter is loaded up. I did get a chance to finish the newsletter. I haven't completed everything on the website yet, which I'm hoping to do that tonight. I'll show you what I mean by that here in a second. But right now, the market is trying to make a recovery, make a rebound. And you can see here from IBD, Investors Business Daily, they still say market in correction, but indexes extend rebound, but remain below the 50-day moving average. So this did say exposure should be 0 to 20%. It's now raised exposure to 20 to 40%. So first step, but there's still a lot left to go. In fact, if we click on this button right here, S&P, this is what the S&P looks like. And you can see that it made it right back to this area right here, the 21-day moving average, and the 50 is right above it. And this is the area where I said it could meet resistance and potentially start to fall from there. Now, having said that, if you look at the momentum indicators, they are actually starting to turn up. So there's somewhat of a conflict. So we'll see if the market actually does continue higher based on the momentum indicators, or if it runs into stiff resistance right here at around 5,100. So it ended, interestingly, on Friday at 5099.96. So 4 cents below 5,100. We'll see what happens tomorrow when it opens. Looks like it might try to go higher. It might just go sideways a little bit. Next week, we have not too much in the way of economic news. So I'm going to click on the newsletter right here and actually go into it. There's some cartoons, and this is last week's economic calendar. So last week we had GDP came in weaker. So the economy is slowing down. However, PCE came in hotter. So inflation is still heating up, higher than expected, same as last month. But the expectation was for 2.6, it came in at 2.8. I don't think that's enough for the Fed to raise at their meeting, which is next week also. That's probably the biggest news for next week is the Fed meeting. I don't think they'll raise at that meeting, but they probably will talk pretty tough against inflation. We'll see if that has an effect on what the market does. See here, the FOMC meeting press conference is on Wednesday, May 1st. Interest rate decision right now, forecast is for it to be stable. We'll see what happens. And then Friday, we have the jobs number. And the jobs number also, it's forecasted to come in at 210,000, but it has blown away the numbers every month. So you can see last month it came in at 303, but every month it gets revised lower. So we'll see if that happens again. Probably will. That 303 will probably get revised lower. Right now, the forecast is for 210. I think it probably will come in right around there. If it comes in much higher than that, that in combination with the hot PCE might encourage the Fed to continue to talk tough about rates. The June one, which we've talked about before, we'll talk about again just before the meeting, is going to be a very interesting and important CPI reading in June, which actually comes in the morning of the Fed meeting. So it's going to come in at 8:30, and then the Fed will have their press conference that afternoon at 2:30, and they'll have their rate decision at 2 o'clock. But the CPI number will come in at 8:30 that morning in June. So the June one's going to be really interesting. Keep an eye on that. So unemployment is the big one for this week, as well as the Fed meeting, which I think won't really do much other than the way that in the press conference, the way they talk about inflation might have an effect. Now, last week, was all about earnings. So you can see here, this is the January barometer that I put. It's on the charts page on the website, so you can keep track of this. So, it was higher for the month. And normally when that happens, especially during an election year, the market ends higher. And then this is our sell-off that we had. It went down about 5%. And I said we probably will get a sell-off about 3 to 5%. We did get about 5%, maybe a little bit more, 5.7. And then we're right at this resistance area right now. So it's going to be really important to see what happens next week and whether any of those reports are going to affect it. This is the SOM rule for the unemployment. So unemployment right now, for this to be met, this is recession start, when the 3-month, which is the red line, currently it's at 3.8%, rises by more than half a point above the 12-month average, which is the green line. So you can see it's already risen above it, but not by a half a point yet. It needs to get to 4.2 for that to happen. And those numbers will change as we get new data. So this will change a little bit after Friday's data, and we'll keep an eye on that. Now, on my website, on the charts page, right at the top, I have the Santa rally or the January effect. And then I moved the recession watch right to the top. So you can very quickly see the 3 pieces that will indicate whether a recession is getting close or not. One is the unemployment rate, which is what I just showed you. The other one is the Fed rate hikes. Whenever the Fed starts to cut rates, then a recession follows about 3 to 6 months later. So this is the recession in 2001. Here's the rate cut. Here's the rate cut in 2007, leading to the 2008 recession. Here's the rate cut just before COVID. Now, nobody knew COVID was going to happen, but interestingly, after the Fed cuts rates, we get a recession. They haven't cut yet. So that one still hasn't been satisfied. And then finally, the yield curve also is starting to creep back up. And the pink line is the 2-year versus the 3-month yield curve. And that is above 0 now. It went above 0 back here in 2023 in the 3rd quarter, but then went back below again. But this one here, this is the 10-year and the 2-year, which is the one that everybody talks about. That one has not gone back above 0. So the recessions occur after it goes back above 0, 5 or 6 months later. So that has not happened yet. So none of these recession watch indicators have occurred yet. So we're still a ways away. We're at least probably sometime in Q1 next year before that happens. So let's take a look at some of the first, here's relative index performance for this year. So you can see here the Magnificent Seven had a big sell-off, but now they're starting to recover. S&P is the blue line, the NASDAQ is the green line, the Dow is the red line, and then the Russell mid and small caps is the orange line. And you can see naturally the Magnificent Seven is outperforming everything. The NASDAQ is starting to catch up. The small and mid caps were beginning to catch up, had a pretty steep rally right here, but then they pulled back too with everything else, and we'll see if they catch up too. For the Magnificent Seven, let's take a look at those, because some of those are the ones that reported last week, and that, I think, was the biggest effect on the market. Google, right there. Google had a big gap up, significant gap up. You can see here, right there, it's a black candle, so it sold off, which is normal. When you have a big gap like that, usually there's a lot of profit taking. But it didn't go below the low of the day. So still a strong view for Google. The other one that reported is Microsoft. And Microsoft had good numbers. They did gap up, but they didn't really get above the 50-day moving average. And the momentum indicators haven't really crossed over yet either. So, and then they actually sold off at the end of the day. So that one, let's look at a 10-minute chart. You can see here, big gap up for Microsoft, kind of went sideways, and then towards the end of the day, really the last 30 minutes, roughly 15 minutes, sold off significantly. So is that a warning for Monday? We're going to find out. Meta, of course, had bad earnings, so they gapped down. tried to make a comeback, but basically stayed right where they closed after their earnings. And all of the momentum indicators here are below. You can see where it went below their peers down here on this blue panel. This compares Meta with its own industry group or its peers. And here in second week of April, it actually started to underperform its peers. That to me is a sign, as when you go into earnings, that's a sign that earnings may come in worse than expected. I said that about Intel last week as well, because they were underperforming their peers significantly ever since the beginning of the year, in fact. And I said that their earnings probably will miss as well, and they certainly did on Friday. You see here a big gap down. So that's one thing to look at. If we go back to the Google chart, where's Google? Well, let's click on it again. Google chart here, you can see they've been outperforming ever since really in March. They began to outperform their peer group, and they had great earnings. So what's coming up next week? We have, let's see, Amazon is coming up next week. So Amazon had a sell-off, and then they came back up on Friday with the rally, but didn't get back above the 21-day moving average. But some of the momentum indicators are starting to look positive, and they were absolutely outperforming their industry group. Then they pulled back, and now they're starting to outperform again. So Amazon might actually have good earnings next week. The other one that reports is AMD. So AMD has been underperforming their industry group really since February. Came back up a little bit in March, but then just fell apart again. Even though the momentum looks like it's starting to pick up again, it still hasn't crossed into the positive area. That would be a buy signal. Had a little bit of a rally on Friday, but their earnings are on the 30th. So that's Tuesday. So AMD has earnings on Tuesday, and between them and Amazon, they might be really the movers of the market next week. Amazon is also on Tuesday. So Amazon and AMD are both ones to watch on Tuesday. If we go back to the website at the top, and this is available for anybody, there's an earnings calendar right here. So upcoming earnings, and we'll look at the NASDAQ 100. You can see PayPal's coming up, AMD on the 30th after the close, Amazon on the 30th after the close. So Wednesday will be a pretty interesting day. Wednesday is also the Fed meeting. So there's a lot of catalysts next week that could move the market. What else we got coming up here? Moderna, Apple on the 2nd, which is on Thursday after the close as well. So if we look at the Apple chart, there's Apple. Apple's been in a downtrend for a while now. You can see here, ever since the beginning of the year, it's been trending down, trying to make a little bit of a rally right here, but it really hasn't gotten back above its moving average lines. And it's even below the 200-day, which is, you never want to see that on a stock. So how does they look versus their peers? Underperforming their peers as well. So Apple is not looking good. Apple may miss earnings on Thursday. So we'll see what happens. Let's see. Apple is Thursday after the close. So Thursday night. So Friday might be another catalyst for the market on Friday. Now, let's talk about the market timing strategy that I've mentioned before. And I'd set up a kind of a tracking system here. We went into the triple leveraged inverse ETF, SQQQ, which is right here, because it looked like the market had really confirmed a downtrend. And it still could be that way because it hasn't gotten through that resistance level yet. However, I said when this was first entered that the stop would be at 11:45, and it closed Friday at 11:43. So this was stopped out with an 8% loss. It's much better to get out. You got to stick to your rules. So there's rules involved. This is a rules-based system, and you have to stick to your rules. If there's an area where you place a stop and you want to get out, you want to get out with a small loss, not a large loss. And if we look at the chart, this is the daily chart. You can see right here, there's the stop. And on this whole system, this market timing system, I'll actually put where the entry is with a vertical line, and I'll put where the stop is, and then you can actually see where it ended up. It actually closed below the stop. And the momentum indicators are rolling over, getting ready to cross as well. So we'll see. This could typically, this could reverse as we're getting near a top, and if things are going to roll over, it could easily go back and forth for a while. But we don't take the risk. We get out wherever our stop is, and we stick to the discipline. So we'll see. And one of the ideas around being successful is the ability to switch. If the market proves you wrong, then switch and get out. Don't take big losses. You can see the gains we had for a year in the double leveraged, basically a double in 1 year, but we don't want to stay in it and take too much of a loss. So we'll see what happens. I always send an alert out to annual members whenever these things happen, so everybody knows what's going on. These are the long-term charts on the right-hand side. So if we look at that for SQQ for long-term, you can see it's just getting ready to cross back above it right here. And the chart looks like it's trying to move higher. We'll see. This is one of the reasons why I thought I had confirmed the downtrend. So we'll see if this continues or not. So again, I send an alert out to everybody as soon as this happens, and I update the website every day, so you can always watch it. Now, one of the things that I'm going to do on next Sunday is I will do a Zoom meeting for annual and monthly members, people that have signed up on the website. And I record these meetings and put them right here on the webinars and videos page. There's also some educational videos that I recorded, and 2 that Tom Bowley recorded that are open to the public. So these are great ways to learn about technical analysis. The Zoom meetings that I do, which we'll do one on 5/3. So usually they run about 2 or 3 hours, and it's just an open forum. I might have a topic that I'll start with. In fact, the topic I'm going to start with this week is trading for the long term. What kind of charts do you use if you're a long-term investor? You want to look at weekly and even monthly charts instead of daily charts. And I'll give some examples of that and show that, and then basically just open it up to questions, and we'll talk about anything that anybody wants to talk about, including looking at individual charts of certain stocks. So that's coming up. I'm going to send out a Zoom meeting to anyone that has signed up on the website. But the newsletter is always free, and there's some things on the homepage that are interesting as well. There's a Bitcoin chart right here. Bitcoin has basically been going sideways in this channel, and that really hasn't changed much. So we'll see. And even with the Bitcoin halving, it didn't really have much effect on where the stock went. So we'll keep an eye on that, but it's something that you can keep an eye on right here on the website. I mentioned that I haven't completed all of the updates yet for this weekend, and the one that I'm going to be working on here now that I'm back from the Keys is I've updated the VectorVest top 10 stocks right here. I've updated them here for the IBD Investors Business Daily top 10, but I haven't done the earnings beats one yet. But I have updated the S&P large cap, mid cap, and small cap stocks. And it was interesting one of the things I like when I do this is I actually get a chance to look at the charts. So I looked at some of these as I was posting them here. I'm just going to go through these. So this is the top 10. We'll start with number 1. And just take a look real quick at how those charts look. Notice it's gone from lower left to upper right. It's kind of gone sideways, and it may be getting close to a breakout. So that's the kind of thing you'd like to see. This blue panel down here is how they do it versus their peers. And remember, this is all small caps. So that's number one. Number two, Carpenter Technology. Look at that chart. It already just broke out on Friday. That's interesting. Powell Industries, another one that's kind of making a little bowl down here, just getting about to go above its 50-day moving average, and about to outperform its peers. That one looks really interesting. Kellogg has just been on a run ever since middle of March. Had a really nice run higher, and everything is positive on that one. Number 5 is SkyWest. And it's always important to look at when the earnings are coming too before you take a position, because you don't want to do it the day or two before earnings, because you never know what's going to happen. That one's interesting. Here's Archrock, again, making a kind of a little cup, if you will, down here. The momentum has already broken out. The MACD, basically this is a MACD up here. This has not crossed yet, but outperforming its peers and has been for quite a while. Itron, earnings coming up on the 2nd. So that's one that earnings are coming up soon. It looks like it's trying to break out, but I would wait to see how they do for earnings. Here's LPG. This is a liquid gas. Again, earnings on the 22nd, same day as NVIDIA, interestingly, but outperforming its peers. Number 9 is Mercury General. This is in the property and casualty insurance space. Now, this was broken down. So even though it's in the top 10, it may drop out of the top 10 pretty quickly as well. You see the momentum indicators are starting to roll over, and all this looks like it's starting to move lower. So their earnings is on the 30th, which is Tuesday. So that's one I would be very wary of. Definitely would not take a position in that. And then this is auto parts, consumer discretionary. Auto parts getting near a breakout as well. And look at that versus its peers, definitely outperforming its peers. So that's one way to use the website. If you just want to look at small caps, you can do the same with mid caps. You can see NVIDIA is number 1 in the large cap space. So it's making its way back. NVIDIA historically usually starts to make a run before earnings, and earnings is on the 22nd. So it's about 3 weeks away. So this is the time when NVIDIA might start to move higher, and all of the indicators are starting to move higher as well. So that's one to watch too. And interestingly, the semiconductor space on Friday just gave a green signal, an up signal for semiconductors. So even after they had a big, huge sell-off, they had a huge comeback, huge rally. However, the candle is still inside of Thursday's candle. So it really hasn't confirmed the rally yet, but it looks pretty good. Semiconductors might make a comeback if AMD reports next week. So if AMD has some good numbers, that actually might continue higher. So just a way to use some of the information. There's a lot of information out here, and I'm going to be finishing the update on this later tonight. Okay, so that's it for today. One question that was asked is on TLT, and I'll probably cover this on Sunday's Zoom call, but here on the market bias matrix, it captures indexes, sectors, industry groups, intermarket relationships, commodities, metals, and currencies, and tracks them over time. So you can actually see how the colors change over time. It's starting to move back to green again. And this is the longer overall chart right here, hit bottom right there. The orange is the short term. That might have hit bottom. The gray is the medium term. It still hasn't quite turned up yet, but usually the short term goes first and then the medium term. And long term is just kind of static, just moving sideways. But TLT is on here. This is for bonds. And bonds have really not performed well this year. And I think they might make a nice comeback if there is a rate cut. But that probably is not going to happen until closer to the end of the year. So bonds are in a channel right now. It's at the bottom of the channel. maybe starting to move back up. But that's one way you can track some of those things by just clicking on the little buttons here on the left for each of these things. You know, steel was looking good for a while, but now steel's sort of fallen off a cliff. Also, gold's in here. So here's gold. Gold had a little bit of a comeback, but it looks like a healthy, normal pullback to the 21-day moving average and might be ready to start taking off again. There's also silver right here. So silver looks just like gold. So silver too, we'll see if that 21-day can hold and silver and gold start to take off again. So anyway, that's a way to use some of the things on the website. Hope that was helpful. I think we need to watch things for next week. There's some catalysts that could occur that could move the market one way or the other. The Fed meeting on Thursday will be really important, or rather on Wednesday, May 1st, will be really important. We'll see what they have to say. They probably won't raise, but they may talk tough against inflation. And the jobs number on Friday, I think, is the most important on the economic calendar for next week. So that's it. Just a quick overview. So where we are right now, and hope everyone has a great week. Let me know if you have any questions, and either leave it on the YouTube or send me a note to breakpointtrading@gmail.com, and I'd be happy to reply. Thanks, everyone. Have a great night and good trading.